Well, hello traders and investors. My name is Roger Scott. I'm the head trader for WealthPress. Today is December 9th. The year is almost over. Some of you are happy, some of you are upset, but I'm going to say that for the most part, people are happy to be done with 2020. So let's talk about global economy. And I'm going to tell you again, I've been talking about the put to call ratio, but it's really getting overbought and I'm getting very, very nervous about this. So you may consider this may be a good time to start moving into ETFs or partly cash, because I don't think we're going to stay around these levels anymore. But let's talk about global economy and we'll go from there. So world shares chugged a little bit higher. If you look at the indices, we're kind of mixed a little bit. The Dow's up 87, the NASDAQ is down. There's really no heads or tails. The fact that the NASDAQ is down and everything else is up. Remember what I was telling you. You're going to see this. You're going to see this between now and the time the vaccine comes out. You're going to see the NASDAQ 100 either higher than everything else or weaker than everything else. And if it's weaker than everything else, that means people are, and everything else is higher, that means people are greedier because, they're greedier because they believe we're going to go back to the economy we had before February, March of this year. If the NASDAQ leads and everything else falls down, then we're back to the stay-at-home economy that we had in February, March, and April, which I think is going to happen. But right now, things are mixed. So again, looking at the global markets, things are a little higher right now. But again, I think we're in a very, very delicate stage where we're going to have a little pull-off or a little sell-off. Global markets were mixed. There's not really that much going on in terms of volatility. Price index slipped 0.5%. Economists said the country first slipped into deflation since 2009, but was no cause for harm or alarm. China is doing a little bit better than us, actually, in terms of the COVID recovery. They're a little bit ahead of us because they got it before us and they're recovering. Remember, they were like bleaching the streets every day. So these guys are serious. Now, the leaders of Britain, European Union were to meet Wednesday for a final push at Brexit deal. Good luck on that. I mean, how long have they been working that out? Investors were encouraged by an upbeat news on COVID-19 vaccines and reports that lawmakers and the White House are making progress, which is why the indice is going back to the get out of the COVID-19 economy versus going back to the stay-at-home economy. Now, let me continue this. The likelihood that distribution or one or more of the COVID vaccines could begin in the U.S. in coming weeks has kept investors in a buying mood. That's why we're near all-time highs. But again, folks, it's not going to be all or nothing. There's going to be bumps in the road. The need for the vaccine has grown more urgent as COVID-19 cases have surged around the world. We've got like 1.5 million lives, 284,000 people in the country. It's terrible. And last Tuesday, Treasury Secretary Steven Mnuchin said he offered $916 billion package to Nancy, and that adds $600 direct payment for most Americans. But it wasn't good enough for Nancy Pelosi. God bless us all with Nancy Pelosi. In other trading news, crude oil, $46 per barrel right now, which means there's a chance that energy prices are going to go higher, because if prices going higher, that means there's less supply slightly and more demand. I think this is because of the OPEC meeting last week. But again, don't cross your fingers just yet, because we're still in a steep downtrend. But again, at least prices are trading above $45 a barrel, which is a good target, at least for now. Now, looking at the reports, we've got the JOLTS, we've got wholesale inventories, we've got petroleum reports, and I promise you, I'm going to play Nostradamus here, and it's going to be a negative report. It's going to be a report that we still have way too much crude oil. And remember, the long-term trend, if you look at crude oil, let me show you this. Actually, let me show you crude oil. Actual crude oil. If you look at crude oil, which we will do right now, man, so many clicks to get to everything. This is weekly nearby data. This is actually exactly what I wanted to look at. You could see that we're going higher, but on a weekly basis, we're still below the 200-day moving average. And that's not very positive. So if we can get above the 200-day moving average on a weekly basis, that would be positive. On a daily basis, we're above the 200-day moving average, but, there's always a but, right? This is where we made the previous high, and we might have gotten even high. No, this was it right here. I don't feel comfortable about going long crude oil till we're much, much higher than right now, or till we hear a lot better news from OPEC. And so far, there's way, way, way too much supply and just not enough demand. Now, the big report for the weeks are going to be Thursday and Friday, which is usually the case. We're going to see jobless claims. And the number I'm looking for is I want us to break 700. If we can break 700, I think we will be in a better shape, but we need to break 700,000, all right? So I'll be also keeping my eye out on the consumer sentiment number, because that consumer sentiment number is very relevant to the GDP. Because remember, consumers make up about 69 to 72% of the GDP. And the GDP is based on retail sales by that percentage. So again, be very, very cautious. Now, I wanted to show you this, kind of give you a technical look on the NASDAQs, but for some reason, this thing doesn't want to move my way. It's just not my day today. All right, again, we're still having divergence, but, and we're overbought, but it looks like we're going higher. Folks, I'm going to tell you right now, you got to be very, 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 very selective, because this put to call ratio, look at this thing. This is like a rubber band that's stretched out like this, and it's just ready to just contract again. And I'm telling you, this is 3 months. Look at 11 months. I'm begging you, please, please, please take a look at this right here. This is dangerous zones. Every time we move down to the 70, 65, we bounce back, and the market is vulnerable. The S&P, if you look at the QQQ as well, you will see that it's exactly the same thing. So it looks like we're going higher, but I'm telling you, look at this divergence. I mean, it's nuts. So it's very, very, very limited. Let me go to my stock fetcher. Let me go to my filters. And this is the NASDAQ 100, and you could see here the top stocks. And right now, I'm going to tell you right now, if I was a betting man, here's what I would look at. I would look at sure things. I wouldn't speculate right now, because the strongest stocks are going to be the most resilient, all right? But if you really, 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 really want to be on the safe side, I recommend you rotate right now. This is just a recommendation. I don't have a crystal ball, but I think what you should do is put some assets away from equities and into ETFs. And you can use just regular ETFs. You could use SPY if you wanted to. You could use QQQ. But the bottom line is an ETF is more diversified. So if the market does start going down, you'll have a better hedge. And if I'm wrong, and God knows I've been wrong many times, and the market goes higher, you still have an asset that's making money. So what I would do is I would slowly start moving from stocks to partly cash, partly ETF. And then if I'm wrong, we'll move back into the stock market. But I'm telling you right now, based on the put to call ratio and based on what I'm seeing from divergence levels on the NASDAQ, the market is overbought, it's stretched out. And again, I would either look at top stocks like Align, disruptive stocks that are going to go up no matter what. Qualcomm, Melly. Those are good stocks. Melly, Qualcomm, Align. I would Zoom maybe. I wouldn't go looking for speculative stocks right now. Now, before I let you go, I got something for you. Folks, today's the day. I'm teaming up with live trade profit head trader Josh Martinez, 1 p.m. Eastern time, to reveal for the first time ever this bizarre trading phenomena that takes place every Friday at 4:01 p.m. Eastern time. Exactly. It's called Phantom Tracker. Now, I'm willing to bet you've probably never heard about this event, but it happens every single Friday when the stock market closes for the week. But today, you'll be able to access this after-hours phenomena that could potentially triple your investment over the next 2 months. Don't waste your time. Click on the link below. Join Josh and me today. You don't want to miss this. This is going to be really, really cool. We're going live at 1 p.m. Eastern time. Check this out. Josh is awesome, and we're going to have a blast. You don't want to miss it out. And hopefully, it'll also help you make some money. If not, at least we'll all hang out and have a good time. I'm just kidding. You guys have a wonderful day, and click the link below, and I'll see you at 1 p.m. Eastern time. Don't miss this 4 p.m. phenomena. It's very, very cool, and it's happening this Friday at 4:01 p.m. Eastern Time. I'll see you guys soon, and give me comments, feedbacks. Love me, hate me, let me know. I'll talk to you guys later. Bye.